Hi guys, this is Esther Brodovic online on eurodollartrend.com. We are the 24th of July 2018, and let's talk about the eurodollar. Yesterday we traded on eurodollar. There was a divergence, negative divergence, and we're gonna check exactly what happened. Let's do it right now. Okay, here we are on the MT4 of Pepperstone broker. I just want to remind you that Pepperstone is a great broker from Australia. For countries allowed to open an account at Pepperstone, regulated broker from Australia, you can get very small spreads and high leverage, and therefore you can trade with very small margin. And it's very important because I checked last week on different brokers from Europe the margin that is required to trade euro dollar, and it's completely crazy. I mean, for one lot you need to have at least above 3,000 euro in order to open one lot on euro dollar. And just to give you an example, on Pepperstone, if you want to open one lot on euro dollar, you will be requested to have at minimum margin 200 euro or $200. It depends on your currency, the currency that you choose to open on your account. But it's completely crazy, this new regulation from the ESMA. Again, so right now we are on the DAX, okay, but I wanted to show you what happened yesterday with the euro dollar. You remember we said that there was a negative divergence on euro dollar. It was in the morning at 5 o'clock in the morning, and we started to trade. I started actually to trade down to short the euro on this divergence, and I want to show you what happened. So if you remember well, it was on the 23rd of July, yesterday. I'm just gonna show you. Okay, so euro dollar was at around 117.40 at this level here. Let me show you. Okay, so that you can see it, this line. Here it is. Okay, so it was 117.46, something like this. Okay, a little bit more, 117.50 actually. Okay, 117.50. This is the peak of the euro dollar, and it was you see here at the bottom, you can see the hours. So it was at 5 o'clock, so 5 o'clock in the morning, it was exactly here. And we had actually divergence. Okay, so as you can see here, the histogram of the moving average of oscillator is actually going down. In the morning, on the last video that I made, okay, we were on 15 minutes chart or 5-minute chart, and we had this kind of divergence, meaning that it was going up, and the euro dollar histogram of the moving average of oscillator was showing a divergence a negative divergence, meaning that candles are going up and the OSMA is going down, showing that maybe we're going to have a big correction afterwards. And it's exactly what happened. Okay, so we had a very nice correction, as you can see, and the bottom of the correction, the lowest level of the correction was actually 116.55. Okay, so it was a great divergence. I wanted to show you this divergence. Okay, so now it's completed. Okay, euro is going up again. Well, we see that we have the cloud, you see, a kind of Ishimoku cloud. It says the ZB cloud lines. It's an indicator which is based on the Ishimoku. And you can see that we have a cloud showing like a fence. Okay, so we need first, if we want the euro dollar going above this cloud, we need the euro dollar to break this resistance, which is 117.20, 117.30, going back up to 117.40, then it will be good, okay, to actually get higher and keep the trend, the uptrend of the euro dollar. Right now it's under pressure and the euro dollar is actually going down. Okay, it's still going down. We have a little rebound, okay, but it's still going down. Okay, the main trend right now on intraday trend is still going down actually. Okay, so we will probably target 116.35. Okay, if we stay under this cloud, and it's better to short the euro dollar. Again, all the things that I'm showing you, it's the things that I'm trading myself, and you're not supposed to copy my trade. I do it only for pleasure. So, and it's written on my website. It's written everywhere. So you do whatever you want, but I'm not responsible of your trades if you follow my trades. Okay? So right now, I should say that euro dollar is better to be shorted. Okay? But as you can see, we can look at the indicators. Okay? It's still going up. Gonna check. Okay, so all the indicators, the moving average of oscillator and the MACD showing an uptrend. So right now, and it will be very nice to check, okay, on the 5-minute chart of euro dollar, if, let's say, the histogram of the moving average of oscillator is completing a wave. Okay, I'm going to show you a wave like let me show you just a second. I'm going to show you which kind of wave. Okay, a kind of wave like this. Okay, you see that we have a big wave on the left. We have a big wave on the left. And then we have a smaller wave, and it's exactly what happened here. Okay, we have a peak, and the second peak that we have is lower than the previous peak. So it shows simply a short trend. Okay, so it's a drop, it's a downtrend. And it will follow, it will drop again. So if we complete exactly the same wave, okay, a smaller wave, meaning that this previous wave of the histogram is higher than the next one, there will be probably a new very nice drop. Okay, so you should start to short the euro dollar when you will see the histogram going red, starting to go red. Okay, it's not the case right now, but it should go red in a oh, here it is. Actually, so yeah, it could be the right time to short. On 30 minutes we are still green. Okay, so if you have enough money on your account, you can do what we call the average down strategy. Average down strategy, meaning that you can you can short at this level. You see my cursor. Okay, so you can short at this level, and if it's going up again, you can short at the higher level and short again and short again under this cloud. Okay, on the 30 minutes. You see that on 4 hour, no, actually it's a daily chart. On the daily chart, you see that you have a very big fence. Okay, it's the cloud. Okay, so so it's a great opportunity to short. And by the way, the previous candle, the daily candle, okay, closed with a down candle. Okay, so there's a big probability of a drop on the euro dollar. Okay, now let's look at the DAX. Okay, the DAX on Pepperstone is a very good instrument to trade for a few reasons. Okay, first of all, it's an asset that you can trade on 0.10. The minimum trade to open is actually 0.10 lots. Okay, and it's a small. It's like actually I'm going to show you on the specification. Let me check just a second. Not this one, this one. On the specification, you see it says that for one lot, okay, for one lot you got €1 per pip. Okay, €1 per pip, meaning that we are right now 12,726, and if I take one lot down and I got 12,725, I got €1. Okay, so one lot is €1. All right, so it's great. It's great. It's not like usually on different brokers, one lot is €25, and it's very dangerous. Okay, because the DAX is actually making big waves. Okay, very big volatility against the euro dollar. Okay, if you are used to trade on euro dollar. Compared to the DAX is actually doing very big waves, big volatility, and it's quite dangerous. If you don't have much money on your account, it's quite dangerous. And right now, with the new regulation, okay, on European brokers, you will need a lot of money on your account to open one lot on DAX. Okay, right now on DAX, on this DAX that we have here at Pepperstone, okay, it's great. One lot, €1 per pip, and one lot is something like €62 margin. Okay, compared to European brokers, one lot could be much more, could be like €6,000. or more, even more for some brokers. And if you have one lot euro dollar for more than 3,000 euro, probably some broker will give you a margin of one lot for the DAX at probably more or less 10,000 euro. And it's becoming crazy because small accounts can't actually trade on these accounts with the new regulation. So at Pepperstone, you can trade all the assets with small margin, and it's great. It's great to learn. It's great to put small amounts. You can put 1,000, 2,000 euro and trade whatever asset you want. So I really recommend you to open a live account, and I will give you a link for that, to open a live account at Pepperstone, and it will be great for you to trade. They have great educational tools, and you can really trade and learn how to trade, and it's great. And if you're not compelled to put a lot of money on your account, so you're taking less risks. Okay, so this is what I wanted to tell you about the DAX and about the Pepperstone advantage compared to the European brokers. Okay, and I just want to remind you that it's a complete regulated broker, no problem of withdrawal. A very fast withdrawal. I tested it myself. I put some money and I tried to withdraw my money. Within 2 days, it was in my account. So there's absolutely no problem. And the great thing is that when you click on withdraw, nobody's calling you, why are you withdrawing your money? And it's a shame that you are withdrawing your money, and you shouldn't withdraw your money. You can make great things. And okay, so at Pepperstone, nobody's calling you. Okay, every tools that you need and resources are online. Okay, so it's a great broker, and I love it. So and this is why I'm actually promoting Pepperstone. I love it very much. So right now, let's go back to the DAX, and I want to show you a great divergence. Okay, we have a negative divergence on the DAX. Okay, now it's quite problematic on the DAX when we have a negative divergence, because the DAX, as I told you, is a very big volatility asset. Okay, meaning that if we have a divergence, okay, it will take time for the asset to actually follow this divergence. Okay, so it's obvious on the 5-minute chart we have a divergence. Okay, it's obvious. If I change the time frame, and you see that it's still going up, and I took already 2 trades on the DAX. Okay, you need to have a lot of money on the DAX. I mean, if you have 1,000 euro on your account, or $1,000 on your account, and you're trading with 0.10 lots, I mean, it's great, because even one lot, as I told you on the DAX, is 62 euro margin. So you can take even 10 trades of 0.10, okay? And as I just told you before, you can trade and do what we call the average down strategy, meaning that you are following the wave, and you're actually opening exactly the same direction position, okay, following the divergence, okay, the negative divergence, meaning that you short all the way, okay? So you short, and at a certain moment, there will be a correction, and we hope it's not, it doesn't mean that it's gonna be the case, but we hope that all the position that we set on this platform, or all the sell position that we set on this platform, will be after a few hours, there will be profits on these trades. Okay, so if you have enough money on your account, of course you can trade with the average down strategy, meaning that you are following the divergence. Okay, if it's going down, so you take sell positions as much as you want, but at least you need to have money on your account to be able to sustain the uptrend right now. Okay, as you can see, it's going up. It's going against my sales positions. I don't know yet, and as you can see on the 30 minutes, I don't know yet if really the DAX will turn down. I don't know. Okay, I'm taking a risk, a big risk. Okay, and I hope that the histograms will get red at a certain time, and the wave will actually retrace down and get back to a lower level. Okay, here we have a daily chart on the DAX. Okay, let's see on the 4 hour. It doesn't look good at all. It doesn't look good at all. On the 4 hour, you see, at 9 o'clock in the morning, today, 24th of July, 9 o'clock, we had a gap going up. There was a big gap. Okay, you see it's here. This is the gap that we have. And from this gap, we have a 4 hour candle that went up. Okay, and it's still going up. It's showing an uptrend. Okay, showing an uptrend. What I'm doing right now, I'm not actually following the uptrend, even though it's going up, but I want to trade on this negative divergence. This is what I want to do. So it's a short time frame. It's actually a strategy based on a short time frame. Okay, it's not a strategy working on the middle term time frame. It's on the short time frame. So that's the reason why I wanted to short the DAX. Okay, so of course, if I see that the DAX is breaking resistance, let's see the resistance. Here we have the cloud. Okay, so if we go over 13,000, okay, 13,000, if we go over 13,000 and I feel that I don't have enough money to sustain the breakout of 30,000, so probably I will close my trades and I will actually agree to lose money. Okay, right now we are under the 12,800, and I hope that the DAX will go down. All right, so I want this divergence to actually go over all the time frames that we have here. Okay, right now we have a diversion on the divergence on the 5 minutes. I want this diversion coming through the 15 minutes. You see, on the 15 minutes is still not going down, but as we can see, it's the OSMA, the moving average of oscillator, is actually retracing. Okay, and also the MACD is retracing right now. It's so we need to wait for the red bars on the OSMA, and from time frame to time frame, okay, we're gonna have a kind of virus, okay, negative divergence virus, and we'll go through each time frame, and I hope that in a few hours it will go down. So I'm gonna try to do to follow an average down strategy. All right, so let's see what's gonna happen. It's 12:42 right now, 12:42 p.m. okay, 24th of July 2018. Okay, you can see it on at the bottom of my screen, and let's see what will happen. Okay, so see you then, and I hope you appreciated my new video webinar, and I hope you will follow my webinars. Bye bye.